I'm Clara Hermit and this is Mould on Markets, our regular look at the financial markets with Investment Director Russ Mould. Russ, how are you?
Very well, Clara. How are you?
Not too bad at all.
Good to see you again.
Russ, what is it that advisors and their clients need to be thinking about at the moment?
Well, I think what we're going to be looking at here is we're going to be talking about SOXX, the SOXX, or as it's more fully known, the Philadelphia Semiconductor Index. Now, it's a benchmark that can be easily followed for free on Yahoo or any of those information sources you get on the web, and it's also tradable by a number of US listed exchange traded funds. Now, it's formed of 30 silicon chip making equipment specialists. Now, most of them are American, some Asian. There is one plucky Brit in there, which is the FTSE 100 constituent ARM Holdings. Now, the SOXX is important because it's trading at pretty much a 15-year high right now, as this chart behind us shows. The big renaissance in tech names is helping to fire the SOXX higher, the Nasdaq higher as well, and there's also quite a good apparent correlation between the SOXX and America's S&P 500, which is, let's face it, a huge influence on equity markets absolutely everywhere.
Okay, so that makes total sense. Why do we need to be looking at SOXX right now?
Yeah, I mean, again, silicon chips are, well, I'm going to use a big word, ubiquitous. They're pretty much everywhere, and you know, if you look towards the future, concepts such as Apple's iWatch, the Internet of Things, self-driving cars, the connected home, without them, no chips, none of that's going to really function. And in the end, everything that we do, whether it's smartphones, cars, toasters, they've all got silicon chips in them, so they're actually quite a good Geiger counter for global growth overall. Now, 2014 was a good year for silicon chip makers. Sales worldwide rose 9.3% to $336 billion, according to trade body the World Semiconductor Trade Statistics Organization. That was the best year since 2011.
Okay, so what is it that's driven the acceleration in global chip sales?
You're an Apple fan?
Yes.
Yeah, well there you go. iPhone 6 is one very good reason, but according to IC Insights, the computing and communication segments, they're about a third each of global integrated circuit demand. Consumer electronics is 12%, cars another 8%, then industrial, medical and a few bits and bobs take care of the rest. Now of that lot, iPhone 6 was a huge deal in 2014 in the autumn, but also Microsoft's decision to stop supporting Windows XP, a 13-year-old operating system, well that drove a bit of an upgrade cycle in the PC hardware chain. Now we've actually just had, about a month ago, a trading statement from Intel, and actually that was a bit of a shocker on the 3rd of March, very disappointing, so perhaps the XP upgrade effect is starting to come to an end. Now the good news is this year we've got Windows 10, Windows 9's just disappeared. It's nicknamed Threshold, but it better be an awful lot better than 2012's Windows 8, which was a bit of a flop. Now shares in Intel and Microsoft have rolled over, so maybe all isn't entirely well in PC land right now.
So that still leaves us with the smartphone and table food chain. Apple are right at the top, isn't it?
Yeah, I mean Apple are bang there basically, but although again, I mean everybody who's supplying Apple, their share price is getting a huge tailwind right now. But SanDisk popped out a profit warning on March the 27th and the stock got hammered. Now analysts, being what they are, put that down to specific problems relating to the company and the loss of Apple contracts to rival Samsung. So it could be company specific, and frankly it had better be, or we've all got a few problems. So let's look ahead to the US reporting season now. Advisors and clients should be watching out for three things. Apple's second quarter numbers, they're due late April, normally on the 22nd, 23rd. Intel's Q1s are on the 14th. And Microsoft's Q3s are slated for the 23rd. Now Intel have already had a warning, so that takes care of the numbers. The greater interest here will lie with the outlook statement for the second quarter. And between them, those three big tech heavyweights could set the tone for the SOXX, because they're big customers, and also for the S&P 500 and those equities globally, given that apparent correlation between the chip index, the S&P 500, and therefore the S&P 500, and the rest of the world.
Okay, thank you, Russ.
Pleasure.
Thanks for joining us. We'll see you next time. Goodbye.